if you would have went off the grid for about 8 weeks and came back and looked at your account like, wow, I'm doing pretty well. I'm actually made money while everybody else's 401ks have been blown up.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today we're going to be digging into the gold and silver markets and also the mining stock markets. Kind enough to be joined by David Erfle of Junior Miner Junky, where he covers a lot of the stocks. He does a fair amount of trading, whether it's the stocks, bullion. And also it's nice because I met David at several of the mining conferences, and I know you're heavily involved and you talk to a lot of the companies, you know these guys personally, which is really nice because perhaps more so than a lot of other industries, maybe like Facebook or Tesla, how many people get access to the executives, but the stories of which guys to watch out for and which guys have good projects and you want to listen to. So I'm quite grateful that we get to catch up. Since PDAC, life has changed a little bit, David, but it's a pleasure to have you here. And how's everything going today?
Great, Chris. Thanks a lot for having me. Yeah, we started to see the machinations of what was about to take place when we were at PDAC, and what's taken place since is quite crazy.
Yeah, and you mentioned something that I found interesting, and I'll bet would be well suited for many people watching, in that obviously markets have a lot of volatility, but if you were a gold investor or a gold stock investor, maybe less so the case in silver in this particular example, but if you had your gold stocks and it was late February, and then you said, you know what, let's go take a vacation to the beach, and just tuned out of all this stuff and then are coming back today, in many cases you're actually up, and points out how much of a mental game it is, because did we do something we didn't want to do while the price was down? But thoughts on that, and perhaps you could break it down for folks.
Yeah, sure. I mean, at the end of February, you had as far as the GDX is concerned, you had a false breakout, and then it quickly reversed into a false breakdown just 4 months later, when we had the deflationary panic to cash, that everybody was selling anything they could get their hands on to go into cash. So the juniors really suffered, especially because basically they consume cash, and nobody wanted anything to do with anything that consumed cash. So those were sold with abandon. But a lot of these stocks have come back to where they were trading before the crash happened in the global equity markets. So yeah, I mean, if you would have went off the grid for about 8 weeks and came back and looked at your account like, wow, I'm doing pretty well. I'm actually made money while everybody else's 401ks have been blown up. So it's really interesting to see how this took place, and it was basically a bear trap for the ages for gold stock investors.
Yeah, because especially there was a couple days where gold got sold off along with silver, but I mean, it really did fill its role as a safe haven, where stock market's still down quite a bit, yet gold again last week got up to 1750, which I think is interesting, because all of a sudden at 1750, that's when it finally, something in my mind switched, where it didn't happen at 1700, but something about, wow, we're not really that far off from the all-time highs anymore, are we?
Yeah, I mean, it hit, to be exact, it hit 1788 and change. And yeah, I mean, I agree with you. It's like that's not very far from the all-time high of around 1925. But the number that I've been really paying attention to through all this since the middle of last year is the 1550 level, because 1550 was very strong support during the last bull market. It tested it about 3 or 4 times, and then when it broke it, that ushered in the bear, and gold went all the way down to 1050. So now the market, I believe, is beginning to price in a 1550 floor as opposed to being a ceiling. And you're starting to see that in the way a lot of these miners are trading.
Yeah, plus you add in that the Federal Reserve is now firmly entrenched in unlimited. I mean, we're in blank check mode.
Yep.
So,
We're in MMT mode.
I mean, it's not like you see that reversing anytime soon. And I'm curious with a lot of the investors that are reading your site, reading the stuff that you talk to. What are the investors looking at right now? Are people jumping into the mining stocks? Still a little bit afraid of being burned? What's the
Well,
tone out there?
I could tell you based on my subscription rates. I've had the best month of new signups that I've ever had, and I started the service in April of 2017. So I think that the generalist investor is starting to come in because I'm getting a lot of questions from newbies that aren't familiar with the sector. I think you're starting to see some generalist capital come in, and I think that'll really take place once the 32 level in the GDX is breached and closed above on a monthly basis. And that could very well happen this month. It's shot back up to that 32 area, and today's action was really interesting as we saw the oil price just completely crater, and the stock market is rolling over, but the GDX, its weakness this morning with gold down $30 was immediately bought, and then it ended up down, I think, less than 1%, while the stock market was down 2%, silver was down 2.5%, the silver ETF SIL was down less than 0.5%. So I think the investors, the market's starting to see the value in these mining stocks that are trading like gold is starting to make that 1550 level a floor as opposed to a ceiling. That really hasn't taken place yet. We've just seen selling with abandon come in about a month ago, like with the deflation scare and everybody running into cash, and especially the juniors. The juniors are really on sale here. The miners have come back, the royalty companies have come back, but a lot of these quality juniors are still lagging. And I think they'll really begin to catch up once that 32 level is breached in the GDX, because once that takes place, I mean, that's a 7-year resistance line.
Mm-hmm.
So once that takes place, you're going to have momentum players come into the space, which is tiny, by the way. I mean, the mining sector is tiny, and you'll also have generalist investors coming in as well, because the generalist investor basically has been in the market only via GDX, GDXJ, and GLD. They really haven't come into the juniors yet.
Yeah, and you actually touched on my next question a little bit. Maybe you could expand a little more, but do you think we're headed towards a situation where whatever that break point is, where you get these guys, the momentum chasers that pile in after it's already up, do you think we're going to have that and have a big move just specifically because of that factor alone, perhaps in addition to others, but is that how you see that playing out?
I do, Chris, because before the sector has a big up leg move, it usually has a false move in the opposite direction to flush everybody out, and we just had that. We had it in 2008 when we had a V-shaped bottom, very much like the one we have right now. We saw it happen at the tail end of 2015, beginning in 2016. Where the GDX formed a base for about 6 months after going down 85% in the previous 4 years. And it built a base there for about 6 months. And then on January 19th, I believe it was, that base was breached. There was a stop run. And then on that exact day, the same day, it reversed higher. And it never looked back, going up about 180% in 6 months.
Yeah.
So whenever this sector has a huge move, there's a false move first to get everybody out of the pool, get all the weak hands out, and then it starts to move up. And I think that just took place. So it's short in the short term. It has become overbought. It's gone up for the past 5 straight weeks. So we might have some more consolidation here. But weakness is being bought, and I think weakness will continue to be bought as long as the gold price remains above 1625 here. And I think that is going to happen, as I because of all the fundamentals that are in place right here.
Yeah, and plus, I guess one thing that maybe people don't often factor in is that now as the Fed's printing, I mean, the money's starting to be put into the system, which will continue. So more money chasing assets. And I was wondering if you could some way put into perspective for folks just how small some of these junior mining companies are, where maybe you can compare it to a stock that's people are familiar with, but just to phrase, because it's like it doesn't take, you can't buy, a fund can't invest $30 million in a lot of these companies. I mean,
Right. Yeah. I mean, if you took
you
all
own the
if you
whole
took all the
thing.
mining stocks and made them one big huge one market cap, it would still be less than the market cap of GE. So, I mean, that's how tiny this sector is. I think it's 0.5% of the entire market. So it's very small. And once you have the retail space come in, that's when it usually begins to take off. And it started to take off for another reason in 2016. I think the big reason it took off in 2016, it started with short covering because, you had the sector, like I said, was down 85% from 2013. So short covering, I mean, that's why shorts are necessary. They're the only ones buying down to the bottom when nobody wants shares. So these shorts started to cover, and then once people saw that the mining shares were finally going up, then value investors came in, momentum players came in, and it got overextended. And then that overextended move has been consolidating, for the past 4 years. And now we've just had this false move lower, shaking almost most everybody out. I mean, anybody that was going to sell has sold as far as quality juniors are concerned. They've already sold. So, like I said, you're starting to see weakness being bought. You're starting to see juniors playing catch up to the miners and the royalty companies, which have already made their moves. So just take a look at the charts of Newmont and Barrick, which are the industry leaders, the two largest gold mining companies. They've already broken out of their 7-year consolidation patterns.
Yep.
So it's only a matter of time before the GDX does, and then the juniors play catch up.
Yeah, it's appreciate you mentioned that, and especially it's an interesting sector because I don't know if the average Wall Street banker can spell gold or silver. Sorry, I got to get my banker digs in a little bit there. But I mean, it's like you don't have Goldman Sachs covering. I don't know if they cover, I mean, gold or mining stocks at all, even the major ones, let alone. It's interesting. I remember hearing Rick Rule mention how you really have some information asymmetry where it's like a lot of these companies, I think he may have said anything under 100 million. There's no analyst research report.
Right.
I mean, some of these you can't, that's what I try and help some of them with getting a video presence on YouTube. But so it's for people who really like doing their homework and researching and digging in. It's not like Facebook where everyone has the same information. Here you can actually dig in and find things and find things that other people haven't.
Mm-hmm. Right. Exactly. Yeah. I mean, it's that's and the industry knows this also. This is why that they're trying to get bigger. This is why Newmont doubled its size by taking over Goldcorp. This is why Barrick doubled its size by taking over Randgold. I mean, they understand they got to get bigger. They have to get market share. So yeah, I mean, I think there's going to be a lot more consolidation going on in this sector. It needs to take place.
So you do think they'll be buying out basically any project with promise? If we get $1,900, $2,000 gold, which would be interesting to see what happens at those momentum points if you have a gap up from there, let alone if this fractional reserve Ponzi scheme is falling apart in the midst of that. Reminds me a lot of the London gold pool, but if we get prices up there like that, you think in that environment, the majors, be like hunting for these things.
I think so. I think it's going to take that all-time high gold price of 1925 being exceeded, and then that'll bring more consolidation in. And I mean, they've already taken strategic buys in a lot of these juniors already. You know, they're doing something different than they did last time. I mean, last time they just bought these companies out. This time they've come in and they've taken strategic chunks of these companies, either 9.9% or 19.9% of these companies. So in many cases, they already own a large chunk of the company before they buy it out.
Yeah, which is what I really appreciate about you and the other newsletter writers, that you go to these shows and all these people, because it's like, there's so much you can get from the corporate presentation, but if you're talking to the people, or you're talking to Eric Sprott or different
Mm-hmm.
folks like that, and because I have a couple people who watch the show that tell me it's like they like hearing from the executives, but they also want to have a guy like you that's dug in, does this full time, and can verify that opinion.
Mm-hmm.
So again, we'll mention Junior Miner Junky. Although perhaps something in the newsletter, just a little tip for folks, for people who might be new getting into this. What's something that they might not be aware of, that's the kind of thing actually that you help them with in the newsletter, that could be a good tip for them to get started today?
Well, I invest in all the companies that I recommend, and I'm not paid by any of the companies. That I also have a column that I write for Kitco that comes out every Friday. Any company that I talk about, there's a disclaimer that I own shares in the company, so I'm not paid by any of these companies to promote them. I'm shareholders. I believe in them. And as far as my service is concerned, it's completely transparent. Everybody gets a heads up before I buy something. They know exactly what I paid for it. They know what I made, what I lost. All of my trades are made available to subscribers at all times. So I'm completely transparent. So basically, it's a we're all in this together type of service, to where we all want to see these companies succeed and we all want to profit by them. I'm not front running them.
Yeah, well, I appreciate that. I appreciate your integrity. That's certainly a big part of this. And again, I would point out, I think one of the things that you get, especially from newsletter writers like David, to me, it's more so that, hey, I know David's out there. He's talking to all the guys running these companies. So it's really some of the access and relationships you get there, and that you passed along as well today in our interview. So, David, thank you, sir, for joining me. I hope we'll be catching up again at one of these shows. Maybe we'll have the Sprott Symposium. We'll see how all of that goes. But David's information again in the description below. And we'll look forward to checking in with you again soon.
Great talking to you, Chris. Thanks for having me.